All right, welcome to another episode of No Investment Advice. We've got the NIA boys here. Jack Butcher, founder of Visualize Value, everyone's favorite designer on the internet, creative genius on Twitter. And we've got Trung T Fan on Twitter, the meme god of tech Twitter, meme master flex himself. Let's kick it off, boys. It's been a big week. Obviously, we're going to talk about Elon Musk buying Twitter today, but we'll get to that in a little while. Trung, do you want to kick us off with meme of the week?
Yeah, we'll tease off meme of the week. As you mentioned, Elon Musk did buy or agreed to buy Twitter with the Twitter board for $44 billion. But we've swapped so many memes, guys. Yesterday, our three-way chat was just out of control.
I mean, this has been the busiest day on Twitter, right? For the year, for sure.
Exactly.
Definitely.
So these two, we laughed pretty hard on. For the listeners, we got two memes of the week. One of them is a picture of Luke Skywalker, the meme character that the
is
lady
that the official name? Yeah.
Yeah, Luke. Wait, Bilal.
Oh wait, I'm the one who sent it to you.
You're the one that sent it to me. So Luke Skywalker is a lady who cried when Donald Trump was elected. Fair enough, right? You can feel certain ways about certain individuals being elected to office. I get that, but I guess it became iconic. So somebody took that image of her crying, this iconic cry, like the mouth open, staring in the sky, like asking God why. And they said a bunch of people are going to take that image and turn it into the left-wing version of Twitter. It's going to be called Bitter. So that's for the listeners. And then the other meme was from a senior recruiter from Twitter, if I'm getting this right. Her name is Dalia Katab. And it's that famous photo of Roman Roy from Succession when he accidentally sends a dick pic to his dad. But Dalia writes, "Me delivering."
Spoiler alert! Jesus Christ, Trung.
Spoiler alert! Sorry, if you haven't seen Succession, apologies. But it's her saying, "Me delivering an offer to a candidate just as the news of Elon buying Twitter breaks." Can you imagine that? Oh my goodness.
I didn't actually realize when I read this, I already found it quite funny, but I didn't realize she actually worked for Twitter. That makes it even better. So
she's either a senior recruiter for Twitter, I should probably figure this out right now, or she is somebody that recruits for Twitter separately, like via an HR firm. But either way, absurd.
Insane week. So look, boys, I think we just let people know what we're talking about today. We're obviously going to discuss Elon Musk buying Twitter. We're going to break that down. There's a little bit more to add there. We're going to talk about SBF, our favorite, Sam Bankman-Fried, talking about DeFi with your boy Matt Levine, is it? From Bluebird?
Yeah.
And we're also going to kick it off with the 1 year review. This is something we've teased for a few weeks, and we got some amazing feedback in the Telegram group. So thanks for everyone who submitted comments there. And we kind of want just to summarize, we never really got to kind of mark it on the pod and talk about like how it's been for us, our favorite moments and stuff like that. So why don't we just kick off with that? I mean, what's it been like for you boys? I know we talk every week. We're in the pod, we're in the DMs, obviously sharing stuff, but we don't actually get to like reflect on it that often. So I'll hand it over to you guys. And for people listening, they're both pointing at each other.
So I guess my biggest reflection, or maybe this is a non-reflection, is like how easy it's been to like rack up a year of these. It almost feels like we've been doing it for a month or two, because just sort of conversation's been flowing for the last year. And I think this is not my world typically is not like real world events, like keeping pace with what's going on in the world. So that's like that just gives you prompts to always have something to talk about. And there's keeps the conversation going in that sense. So been a cool creative outlet and different from like what I do on a day-to-day basis. Distracting at times as well. Like just gives me an excuse to read or stick on stuff that maybe I wouldn't have been reading a year ago, but I loved it. It's been great. Met some amazing people. Obviously the Telegram, it's kind of surreal to see and read that like us just essentially dicking around on a Tuesday afternoon is so
verbal
entertaining.
Shit posting, as Trung talked about it.
So, but this is the future, I guess. So enjoying it. And thank you to anybody listening to this. It's been supporting it from whenever, even if this is the first episode you're listening to. We appreciate it. It's fun.
Yeah, definitely hit that nail on the head. Trung, anything else from you? We can talk about favorite moments in a minute, but I know you are secretly very analytical and you've probably got an essay that you're going to summarize in about 30 seconds now, but what has it been for you, man?
I think Jack's point, it's felt so easy, and listen, we put in work, right? Like, I spent an hour preparing for this episode because I do respect our listeners' time. And we've learned firsthand how hard it is to grow a podcast. Bilal knew this already with his own podcast, Creator Lab. But Jack and myself, I guess, our first time really diving into the podcast game. It is hard to grow a podcast, right? They're just like, you can't do a Twitter thread for podcasts. You know what I mean? It's, although one of our listeners, George Mack, the legend, did say, hey guys, like you're leaving some low hanging fruit. Like short YouTube clips are essentially the Twitter threads of growth hacking for YouTube. So one thing I will add on that is a year in, for the listeners, they probably don't know, but we have teased it a little bit. You know, we kept saying, oh, big things are coming. We've been saying this for 6 months. Hey, guys, big things are coming.
This is the big thing. We're still here.
We've been saying it for months, but we know that there's a lot more we can do that, frankly, is a lot more respectful of our listeners' time, right? Like, we do want to transition a bit more into YouTube first, in the sense of we want to make a lot of YouTube first type of content that is just delivering more jokes, more insights, like better, but doing it in a way that we don't lose like this 90 minutes of verbal shit talking and you just get to sit in and listen to us. So it's a balancing act. Some of the levers to pull is, do we do more episodes? We've talked about that. We don't know. Do we just do one huge recording day and just chop up the best pieces for YouTube? So you can kind of have both versions where you have the fly on the wall, you're sitting with us, we're verbal shit talking, and then we do some YouTube stuff. But we'll see. Big things are coming, people. That's what I'm going to say. But let me just add one takeaway. Like, if I'm going to get a serious fan here, it's the famous Jack Butcher tweet from last June. Jack, you remember? Is this Jack? First of all, for the listeners, it's a tweet that Jack wrote. 90% of podcasts don't get past 3 episodes. That's 1.8 million people a year that quit, or ever.
A year. So this comes from Chris Williamson. Do you know that guy? He's got a podcast called Modern Wisdom, and he's crushed it. He did he's killed it. Jordan Peterson one recently, right? I spoke to him after that. So been on the podcast circuit for probably 2 or 3 years now, and I went on his podcast, and he told me this statistic, and this Reddit post is somebody finding that podcast and like extracting that clip from the conversation I had with him. And
so Jack, you want to finish our thought here?
I'll finish the quote. Yeah. So 90% of podcasts don't get past episode 3. That's 1.8 million who quit. Of the 200,000 left, 90% will quit after 20 episodes. That's another 180,000 gone. To be in the top 1% of podcasts in the world, you only need to publish 21 episodes. So we're headed for the 0.1%, I'm sure, in here, boys.
But also, like, top one, just like in terms of episodes done, right?
Yeah, it's got nothing to do with quality. We're just mindlessly recording shit, and it happens to place us in a statistical anomaly because we're there.
Yeah, pick the numbers that suit your narrative, right?
But there it is, right? That's the only thing I want to add that was like semi-serious. And what I will say is, I think we have done enough and enjoy. Main thing is this: we enjoy it. The moment this becomes not enjoyable, I think all of us are on the same page. We'll be like, you know what, guys, like, it was an amazing run, but if this becomes a chore, we're probably not going to have the same energy and verve for it. But that has not even been remotely the case. Exactly, right?
There we go.
There's a famous Jack Butcher graph where it says, you're going on a straight line. On the x-axis, nothing's getting accomplished. You say this is pointless, and then it all explodes. So I believe we're at the this is pointless point. But, we've done the groundwork, and the audience has been so great. That's the other part of it, which is amazing. You kind of teased it, Jack, is like the Telegram group, but also just getting random Twitter messages. Like, oh my God, like this quote from NIA, like our boy Michael Brandt, he listened to our last episode or 2 episodes ago where I made the ridiculous statement where I'd be a Rhodes Scholar billionaire, which we both all know that would not happen if I drink in coffee. But he's like, well, actually, Trung, caffeine was a really important part of the Renaissance, and hey, maybe you are on something, right? So love getting those kind of comments from the listeners. And yeah, that's the takeaway. I'm happy we made past 21 episodes. The second part is the audience reception has been amazing. And anything forward we do, we really do think about how do we honor the audience's time, because we know 60 minutes is a big ask.
Yeah. Yeah, and then that was great, beautifully summarized. The only thing I'd add is I agree with everything you said. My perspective is coming in from having done Creator Lab since 2015-16. That was me doing interviews, right? So there's a lot more that goes into that in a way, because you having to convince a guest to come on, you do all the prep for the interview, all that sort of stuff. And there's no one else holding you accountable. So if I don't want to do something, I don't have to do it. Whereas with this, we've done it every week for 54 weeks or whatever.
Crazy.
And so that was one thing coming for me. Like I knew I could only do this every week if it was easy enough. And, from day one, we've set up editing. We've now got it down to within 12 hours of us recording, we finish on a Tuesday night. By the morning, we put it
by
out.
the way.
Yeah,
Listeners,
I was going to interrupt you.
Yeah,
we wouldn't have made it past week one without Bilal.
No, I appreciate it. Yeah, of course. But
people, hold on. No, Bilal, stop. You're not letting this slide. The listeners don't understand here. Bilal has been absolutely shouldering the production load 100%, not even like 99%. And I think I owe him $300 or something. We don't know.
Well, it might be a bit more than that by now, but yeah, I need to tally that up. But yeah, no, I will say thanks for that. But also, yeah, the editing, like we've had basically 2 editors, and the latest one, he's been incredible, and he's just like really taking all the feedback. And we went from several days of turnaround time to doing this within basically a few hours, which is really, a lot of people don't realize like what goes into it. I don't want to bore you with all the details, but it's not like you can just record and put something out straight away. There's a lot of like, we put the timestamps out every week. We make sure we cut out stuff if we've lost Wi-Fi connection, those little things. And yeah, so that's that part. The other part I'd say is, yeah, obviously it's been an amazing place for us just to like force ourselves to learn stuff. Again, not to get too serious, but that step-in thing we did last week, I've had that on my like reading list for like 3-4 weeks. And I was like, all right, now I need to do it for the pod. I spent like 3-4 hours like trying it out, reading all the things I could read about it. And that has been an incredible thing for me personally, and I'm sure for both of you as well. And then honestly, for me, looking at, the idea of this podcast was a fun place we can hang out. We have the same humor, essentially. We're all interested in the same stuff. We didn't really see anyone doing something similar at the time. I think the closest one we can say that we look up to in a way is All In. Obviously, have done an amazing job. They're the #1 tech podcast out there nowadays. But they're, they're a little bit older. They're a little bit further in their career. A little bit more successful. But I think on our level, we're also not like just starting from scratch. So we can still offer some unique insights, or at least some opinions. So I think it's been quite cool to see that idea play out and hear people literally in the feedback say, oh, I really like All In, but you guys do this in a different way, or this is more fun for these reasons, or you guys do that but with Web3. And that is quite cool to see, like this idea we had in our heads to come to fruition. But yeah, like you said, it's still very early. We've got a lot more to do.
Big things coming.
Big things coming. I will say, not to downplay it too much, but like, we've grown every month, right? So like we have been growing pretty well. And so even that little chart that this is pointless, like we're way further down the line than we were 6 months ago or 3 months ago. And so we'll continue to keep churning stuff out. But that feedback from you guys was so helpful, because, like we get one-on-one messages, but this is like 20-25 messages at once with like details of your favorite thing. So I'm going to call out a few of the favorite moments, and you guys can tell me if you had anything as well. This was from Dom, said discussing Virgil Abloh and his impact on culture. That was actually one of my favorite episodes, and I don't think we even planned it properly. Just kind of like we talked about great. Virgil, and then it kept going. Super Bowl ads breakdown, takes on Adidas NFTs, cryptodes early on, understanding Jack Dorsey's 10D chess, front seat fans, episode of Rick Burton was a banger. So there's plenty of these. If you're interested, you can check out the Telegram group, and we would appreciate your feedback there as well. I'll pass it over to you guys. If you had one favorite moment from the last year, is there anything that sticks out?
Maybe the Bilal Google suit. That was a good name.
I forgot about that.
Bilal, the only for listeners that don't remember or didn't have a chance to hear it, Bilal is the only Google employee ever to show up at an interview wearing a suit.
That was good. I've got that visual. Nice 21-year-old, clean shaven, not like nowadays. Yeah, very green. Trung, what about you, mate?
I listed off a bunch, so we'll go down memory lane here for the listeners. Tom Osman was probably my favorite episode. So Tom Osman sold the Ether Rock for $1 million. You guys probably remember that was like when NFTs were like, that was one of the moments where people were like, oh, it was that Rock and probably Beeple with the $69 million sale. Those are the kind of two iconic moments of NFT year. The other one, a couple more NFTs actually. Jack, because episode 1, our very first episode was Jack breaking down the sale of he did an NFT. It was the verified one where he basically showed what an NFT was, and it just had a verified tag. I think at the time that was a $150K sale, but forget about the price or whatever. It was just like wild to hear like that. That was when I was like, what is going on? And then attached to that joke was how basically all 2021, Jack's just making these like Nostradamus like predictions, and me and Bilal are sitting on our thumbs making zero alpha.
Yeah, that was, I would say, the Tom Osman one was probably my favorite episode. There's been quite a few, but that one was like the best, like the most banter one. Like it just perfectly clicked, and we already know Tom, he's a legend. You know, I will say Rick was also probably the one that surprised me the most, because I had spoken to him over like DMs and text, but never in person. And then by the time, and we knew he's like kind of a wacky character, right? Like he's funny, but he dropped so much knowledge on that one and was hilarious and could have said 17 things that will get you cancelled, which I also respect. So that was probably another one as well.
Yeah, Rick, he just came out guns blazing with so much. I mean, I knew just
that's
from
gonna be
reading
Lindy, that episode, right?
Yeah,
yeah.
That'll be to your point, Jack, with the lindiness. I think that is one thing we could tease for our listeners in the moving forward. That, you know, something that does matter is just stuff we can do a bit more evergreen. That does have the potential to go Lindy. I think that will be part of this value matrix when we joke about big things coming. But
Trunk's coming in with his deck.
Jesus.
Yeah. I called McKinsey. People, McKinsey is on it. McKinsey is looking at NIA and how to monetize. No. All right. Also, this one was fun just recently. Obviously, when Nick Majuli was on, author of Just Keep Buying.
Yeah, that was really good as well.
We had the Jack Dorsey moment. Jack live responding to the exact moment we're talking about him and his relationship with Elon.
That was great. And
then I will say that my last note here, the most memorable thing of the first year of podcasting, NIA with you guys, is getting some of these hate messages or these jokes. I wouldn't even call them hate messages. Like, here's one of the best backhanded compliments I ever got was on that Nick Majuli episode. The user's name on YouTube is Pineapple Bun.
Sounds like a legit person.
Yeah, Pineapple Bun writes, I hate to say this, on Twitter, Trunk seems like a genius, but on this medium, YouTube, he seems otherwise. And then he just goes, ... yeesh, cringe. All right, so I'm a genius on Twitter apparently, but I'm cringe on YouTube. And there were a lot of earlier comments in the year. Listen, 90% comments are very positive, but a couple ones from the earlier episodes were like, Trunk's talking way too much. We actually, remember we addressed it. We're like, guys, we heard you. Trunk's going to talk less. Thank you for your comments. But Pineapple Bun, thank you for the backhanded compliment. That's all I have to say.
Yeah, that feeds Trunk's soul, man. I know, I could tell that is the haters motivate Trunk for sure. All right, boys. Yeah, I mean, that last thing I will say actually is it will be cool to look back, especially how crazy last year was with especially the NFT stuff. To be able to have captured that every week is going to be so cool. Like I was thinking even like text messages with friends from 2017 near Christmas where we're like, oh my God, Bitcoin's hit 19K and like all this, like just the crazy euphoria. But we not only did that over text, but we had that on an hour a week, capturing all this crazy stuff happening. And Jack, obviously, being a huge part of like the NFT side, Yeah, that was really fun. So even just for that alone, if 0 people had listened, it would have been worth it. But yeah, I think there's hopefully more of those to come. All right, boys. Anything else before we
get more mental from here is my prediction. So
yeah, exactly.
We'll be saying this again this time next year.
100%, man. All right, so again, thank you guys for all the messages and support. We got a lot more coming for you, and let's get into the next 2 main topics. Where do you guys want to go? Should we talk Elon, or should we do SBF, edge of the internet, DeFi stuff first?
Let's hit it, Elon. Let's get right to the meat of things.
I feel like Elon is pretty key. So, Trung, I'm going to pass it over to you because obviously, not only are you best friends with Elon Musk as we described in episode 0. The funny thing is we described that before you had much interaction with him, but since then, Elon's been sharing your memes. You guys are probably texting basis by this point. I'm not sure.
I gotta say we are not, but that would be maybe that's a stretch goals. When we say big things coming, that's what we mean, boys.
Stretch goals, yeah. All right, so look, what has happened since the last time we spoke about Elon, and what is some insights people might not know that they might have read elsewhere?
All right, let me break down a couple things because there's a lot going on here, and I'm gonna need you guys to cut in with your comments and thoughts. But let me first do kind of a quick timeline of where we are. Talk about how the fact the deal's not done yet, like he has not purchased it, and there are a couple more hurdles to pass for him to close the deal, including his financing situation, which is very interesting. And then we could talk about what we've seen regarding what the next steps might be. And then the last part is going to be the favorite, I think, here. The worst takes about Elon buying Twitter. Because if you have been on the Twitter platform like we have, histrionics. People Google the word histrionics. I don't even know what that means. I'm going to look it up right now. But it has been a disaster of bad takes. I guess for some people it's hilarious. Oh yeah, histrionic, exaggerated, dramatic behavior. Kind of like Luke Skywalker. All right, so here we go. At the end of January, Elon starts buying Twitter stock. He begins by buying about $30 million on the first day, and he continues to do so for the next 10 weeks. At the time that he started buying Twitter stocks, about 35, which means it had not moved since it IPO'd 10 years before. So Twitter as a public company has been a disaster.
Hey, Trung, can I ask a question before we get to the next bit?
Yeah.
So these purchases, are these happening before the discussion of him buying or owning Twitter is occurring on Twitter, or is he doing this like prior to those conversations?
The conversations and his kind of like throwing out the polls, they happen about a month into his purchases. So he's buying, he's picking up about 20, 30 million a day. Ultimately has a 9.3% position that he makes public on April 4th.
How do you think he's doing that? How do you think he's making those buys?
Just through a broker. Probably just told his broker, I want to buy, put it in what you think will not move it too much and not raise too many flags. Just keep doing it nonstop, which is basically what happened.
And he has to disclose all of those purchases
when he passes 5%.
Okay.
So on March 24th, he passes 5% ownership. And this is where a little bit of controversy comes in. He doesn't file the 13D. That's 13D if you're an activist investor, 13G if you're passive. April 4th, he files a 13G form. Says that he's a passive investor. As we all know now, it's not accurate. So he files the form late, which by SEC laws, there's 2 ways to look at it. It looks like the most they can really do is fine him a couple $100,000, which is like kind of a joke. But if he had announced his purchases properly at the 5% mark, he would have saved 150 million less. So some people are saying he actually owes Twitter shareholders 150 million, but the legal loopholes to get that's going to be difficult. So April 4th, it becomes public that he owns 9.1% of Twitter. It's about $3 billion investment. The next day he gets a board seat. We covered this, and now it keeps going. April 14th, 9 days later, he offers $43 billion. This is after we recorded, so we didn't really cover that. And then that's $54.20 a share. That's about 40% more than when he started buying. So huge premium to when he started buying, but a premium to his announcement is about 20%. On April 15th, Twitter adopts a poison pill. which means if anybody purchases more than 15% of Twitter, Twitter can dilute them by selling shares to the other shareholders at a discount, which is 50%. This is where it gets interesting. So in hindsight, it looks like Twitter's poison pill was the absolutely responsible thing to do by the board. Because the way they played it was Elon in 2018 had obviously famously said that he had funding secured for Tesla. Some text actually just came out 2 days ago. It looks like he was in very deep talks with Saudi Arabia to take Tesla private. But whether or not that was quote unquote funding secure is another question. Twitter's board basically forced Elon to prove that he had funding to take Twitter private, because by doing the poison pill, Elon now can't just keep buying up stock like at whatever pace he's doing. He's made the offer, but now they're like, okay, show us the money, because you really don't have as much leverage if you can't prove you have the money. So this is where he goes to the banks, and this is I'll jump to financing now because it's so interesting. So this is the financing situation for Elon. The deal will end up being about 46 billion, maybe call it 46, 45, 46. And he is personally putting up $33 billion. So let me show you guys this screenshot about something about Elon, and
wait,
you guys will appreciate
is that a mix between cash and loan on stock, right?
Yeah, he has to put up. He needs to put up 21 billion, and then he has a margin loan of 12.5 billion against his Tesla stock. So some interesting things going on here. So let me show you guys this. So this just is like Elon puts skin in the game, right? This is what you can hate him for a lot of things, but this quote he had, this is a really a well-known quote from Elon. He
Loving
said,
these tags, by the way, Trung. Did you add these tags?
No,
is this
I didn't.
This is Trung's inspiration Notion board.
For the listeners, this is from quote.com or wherever that website is, but Elon talks about PayPal. He said, when he sold PayPal, my proceeds from PayPal was 180 million. I put 110 million into SpaceX, 70 million into Tesla, and 10 million into Solar City. I know that Jack appreciates skin in the game here. Okay, so Jack, how much does skin in the game matter for you when you're judging somebody's character, or like not character, but like their commitment to something? It's like some people can get away with putting zero skin in the game, right? Like look what Elon's doing here.
Yeah, I think it's a completely different operating model for life. It's like you either you execute or you die in that situation, right? And I think that you could pull a Nassim Taleb quote into here as well. There are the three worst addictions in life are heroin, carbohydrates, and a monthly salary.
Yes.
which is
true,
obviously
right?
aggressive, but the point he's making is like the
mental
another thing he was saying. The other thing I think this is another Taleb quote is, if you don't take risks for your opinion, you aren't anything. I think there's something as aggressive as that, but you cannot fault Elon for having skin in the game. And I think that's been true across the board. And you know what really made me, or the thought I had when you pulled that quote up, is like the scale of things and like the financial scale that we're talking about relative to those investments, right? Like $100 million or $30 million. Think about like the multiples that have been created since then in the value of those companies.
Bigger.
I read this weird tweet today that said in 2050, making $1 million is going to be like making $1,000 today.
Mm-hmm.
So it's like, it's really difficult to comprehend.
What year was that?
In 2050, I can't remember where I read it. It was just some tweet that was just talking about, progress, money supply, all of these ideas that you kind of judge something by the mechanism of like the mechanism you're used to valuing things today versus like, in 10 years time, what is a $44 billion investment going to look like in the same way that $30 million into Tesla has now become what? $1 trillion of value. Just pretty wild to think about. And, I don't think anybody has an idea of what the path to profitability is, because I've not seen anybody like articulate anything really compelling, but Trung, I'm sure you're going to go into this. Like even the terms of borrowing that money requires this ship to be turned around, right?
Yeah.
So let me put this.
Actually, could I just add one thing, Trunk?
Yeah, absolutely, Bilal.
Just to put that in perspective, right? Like the biggest acquisitions, the famous ones that we kind of know. Instagram $1 billion by Facebook, Tumblr 1.1 Yahoo, YouTube 1.65 by Google, Skype 8.5 Microsoft, WhatsApp, LinkedIn, Slack. All of these are by companies, right? Up to $28 billion Slack to Salesforce. Twitter, $44 billion, Elon Musk.
He's putting a
not Tesla,
billion,
not
right?
SpaceX, not some fund. This is, obviously he's the richest man in the world, but it's different when a $1 trillion company like Google or one of these companies go and buy, and you can say, oh, it's worth it for these reasons. This is like one person. I don't think there's ever been anything like this, right?
I believe this is the largest individual buyout of scale. So this is, here it is. Jack or Bilal alluded to it. This was Elon replying to me last April when I put that PayPal stat out. Elon writes, had no money to invest in Zip2, but my founder equity yielded $15 million after tax. Of that, I rolled $10 million into PayPal, which yielded $180 million. Then ... Basic principle is that I would not ask investors to risk money on my company if I would not also do so. Dude, look.
Love that, man.
Am I
it's
an
hard
Elon supporter? Yes. Am I defending everything he's ever done? No. But come on, guys. Just as an entrepreneur, nobody puts his nuts on the table like Elon. It is absolutely he is.
That's the quote of the episode so far.
$33 billion. The deal's 44. He's putting up 33 billion. Let's talk into what Jack mentioned. Okay, Elon had said, I don't care about the economics at all. But as Jack alluded to, the lenders care about the economics, right? The lenders aren't going to lend you if they don't think you can make back the money.
I don't care about the economics of my mortgage, but someone
does. Someone's knocking on the door.
So here's the situation. The $13 billion loan, so the part that he is borrowing, not his personal equity that he's putting out, that has about 4 to 5% interest rate based on the debt quality of a company like Twitter. So guess how much money Twitter made in free cash flow last year? $630 million. So all that money to pay the interest, gone. So, but clearly the banks were comfortable enough with that. Okay, so now the margin loan against his Tesla stock. This is where it gets interesting and potentially dangerous. So Tesla stock today is about 950, I think. It dropped about 10%. People are a little bit concerned. If it goes down to 740, the deal as is presently constituted might be in danger from the margin loan angle. He might have to put up more or sell some more equity, because that is the agreement, is like, the Tesla share price has to be this, or we're going to call back the loan, right? So there's that where it gets risky. So a third of the deal, about a third or a quarter, is with this margin loan. And then the 21 billion is also a bit tricky because he only has 3 billion in cash. He could sell some Tesla, which will drive the Tesla stock down, or he could sell some SpaceX. Maybe he has to do that, right? But here's the other things that could happen. He wants to roll in as many private shareholders as possible. That could be anywhere between how you classify, between 200 to 2,000. It's a big difference, but you really only need a couple to come with you, right? Like Jack Dorsey has $1 billion in Twitter. I'm guessing he's going to come with Elon on this ride. If you could sell to, call Mark Benioff or call up your buddy Larry Ellison. Hey, will you put up 5 billion of this equity, or will you put 2 billion in this equity? He might get it, right? My guess on the 21 billion that he has to put up personally, he'll be able to get 10 billion from the rollover, some friends. I bet Larry Page and Larry Ellison will toss him a couple billy. So that's the situation on the financing. Now, the deal itself has other hiccups. So the way that Twitter is currently trading as of 154 on Tuesday, it's pricing in about a 80+% chance the deal will get done. So if it's pricing 100% that the deal will be done, it would clearly be at 54.40, right? So let's see where it's at right now. It's about, I think it's around $50. Yeah, it's about, so they're pricing about 80% chance it's going to get done. And then here are the other things. Yeah, it's $50, $49.50. All right, so a couple other elements. Why did Twitter boards move? We kind of discussed this briefly in the previous episode, but it looks like they kind of defaulted to that they were just going to be a fiduciary. They looked at the broader landscape. it seems like no one else offered anything better, which probably isn't surprising, right? Like we just talked about, Twitter's business has not really improved over 10 years. And Twitter's boards, their responsibility isn't to be, hey, Twitter's the most important like media asset in the world. Like we have to protect X, Y, and Z. That's not their job, right? They really are just a shareholder maximization kind of in that situation. So they kicked the tires. No one else came in. But now they get to present the deal to shareholders. I'm a shareholder. I'm obviously going to say yes, but will other people say no? We'll find out, right? Odds are that typically doesn't happen. Elon could walk away from the deal because let's say there is a mass sell-off in Tesla stock that could change the financing situation. He could still walk away, but a typical breakup fee is 3%. So he'll owe between 1.5 to 2 billion if the deal doesn't get done to Twitter. Twitter could still get a bigger offer, but then they would owe Elon the breakup fee. And then the other kind of big, no, I wouldn't call it big, but antitrust regulators. In the US, unlikely they'll do anything with this. It's an individual. EU is a little bit different. They protect data privacy a lot more. They could be like, one criticism that was valid is like, man, it's kind of crazy how like a single individual could just buy up all the, do you know how much data is on Twitter? Like, I know people are joking like, oh, stop DMing, but the reality is like, there's a lot of like very personal information on Twitter. And one dude, namely, the richest guy in the world, just bought it all, right? And there's no regulatory oversight. That is interesting. But other than that, that's kind of the broad scope of information. Throw it to you guys. Any other thoughts? Namely, what was your first reaction? I know we've been thinking about it, but I actually didn't think it was going to happen and not this fast.
Yeah, this happened so quickly, right? I remember when we brought it up, we were like, oh, he's going to come on. He's going to join the board. He's going to try to influence things. And then maybe 6-12 months down the line, maybe something will happen. And he's like, I've had enough.
Yeah.
But the fact this has happened in like, 3-4 weeks or something like that, that's pretty insane. I mean, it's quite incredibly impressive from an entrepreneurial standpoint. Like that's how I think of it mostly by default, is like, I'm thinking from this guy's point of view, he's like, I see an underutilized asset, whether that is financially, from the financial side, or just because he cares about, some of the values that it represents on the internet and in the world. You could argue how much he cares about either, but that's for another day. So that was one thing. The second thing is, it's quite interesting to see the reception. I'll just call out a couple of things. Here's Jack Dorsey. Jack Dorsey wrote, I love Twitter. Twitter is the closest thing we have to global consciousness. The idea and service is all that matters to me, and I'll do whatever it takes to protect both. Twitter as a company has always been my sole issue and my biggest regret. It's been owned by Wall Street, and the ad model, taking it back from Wall Street, is the correct first step. Last thing, he's got a whole thread here, but just the main thing I'll lastly mention is, in principle, I don't believe anyone should own or run Twitter. It wants to be a public good at a protocol level, not a company. Solving for the problem of it being a company, however, Elon is the singular solution I trust. I trust his mission to extend the light of consciousness. He then goes on to say Parag is also someone I've chosen, and it would be great if they could work together or something like that. That I thought was quite interesting, because we did speculate on the show a few weeks ago, what's Jack Dorsey thinking, and it sounds like these two have become boys in the last year, especially. Like, I think they obviously already knew each other from being leading tech people, but I think like, even I remember we covered that talk, him, Jack Dorsey, Cathie Wood, they had a whole Bitcoin discussion. I think honestly, again, without knowing the details, when they were interacting online, it didn't sound like they were like best friends, right? Like they were like, they know each other, but they were interacting publicly online, discussing Bitcoin at the time. And just going into what Jack said, we've talked about 10D Chess Jack coming back and buying out Twitter himself, or like being able to take it private and make it open and free. Like we've heard Elon Musk talk about, I think Elon Musk talked about the algorithm and some of these things becoming open source
algorithm. Yeah.
Right, which is, that's a huge deal, right? Like, can you imagine Facebook's algorithm or TikTok's algorithm was open source for anyone to see? I mean, that would be crazy. So I thought that was worth mentioning on Jack's side. The other one I did want to just share was Brian Armstrong, founder of Coinbase, said Elon buying Twitter is a great win for free speech and probably changes the trajectory of the world more than most people realize. Twitter is upstream of media and culture in many ways, and it was trending in a very dangerous direction on censorship. So I'm just bringing these up, obviously prominent people in our space, but more so as kind of like that's some of the kind of talking points people have had. The last question I kind of had, I'd love to get your guys' take on is the flip side, right? Like, I'm sure whether that's on your personal social networks like Instagram, Facebook, or people sending in text messages or something, you've probably seen the anti-Elon brigade too, right? And we've been sharing, you might share some of the worst takes in a little while, but like just from an honest standpoint, like what is the actual valid argument for people to be kind of against like him doing this? I know you mentioned there about like a rich person being able to buy all that data, but do you know much about that? Like I've never fully got it. I think I've read a few threads where people are comparing, like that tweet about ending world hunger and how, World Food Program showed him and he didn't do anything. He ghosted them, and like that tweet has got like a couple 100,000 retweets or something.
I think here's a recent example of that, right? Like people complaining about Elon. Okay, so you're talking about the strains that are valid. Let's talk about the invalid strains, right? Like this one is like, why isn't Elon spending this money to solve world hunger, right? It's just so absurd. First of all, we've discussed this. World hunger is not a money issue. It is a logistics, supply, awful government issue, right? Spoilage of food is like 40% of the problem. But having said that, this individual, Margaret Bashir, put up a poll. Clearly, she tried to dunk on Elon, which is a better use of Elon's $43 billion and world hunger by Twitter. 90% of people said buy Twitter. I think there's other solutions to world hunger. Money's obviously part of it, but that was one bad take. That's part of the whole. I think we shared a couple. It's like, why does Elon do this $43 billion? That would be.
I think one more. I thought I screenshot it, but maybe I didn't. Just contextualizing how much money 43 billion is relative to how much money is spent, like $4 trillion a year in tax is paid in the States every year.
Yeah.
It's like, what the
this
is a 0.043% of that, and we're no closer, right? I think it's a lazy argument. So that's where everybody goes, is like, this is an obscene amount of money for somebody to like spend on a plaything or whatever else it is. I think what that also misses is like what I think we talked about when this conversation first came up, which is the importance of the ideas that are born and discussed and proliferated through a network like this. Is so powerful for influencing how people see the world. Like the idea of just pessimism and optimism, like swinging the balance of that. Not to say that that's a thing that we should have our fingers on the scales of, but at the same time, some of these models, when like some of the business models that exist around media, do incentivize doom, essentially, right? Like if you want to look at any given front page of a newspaper, I'm not saying like newspapers should only report good news, far from it, but the idea that fear isn't a lever that is really, really, really pushed on to like drive these economic models is false. And I think transparency into that at the very least would help people figure out what's going on, right? And I think it's going to take somebody who has the ability to look at something from first principles, which we know Elon is famous for founding and building and, acquiring and changing businesses from that perspective. So like, I'm definitely very interested to see how that's thought through on a problem that isn't necessarily mechanical, right? It doesn't have a basis in physics. It's like a biology and a psychology problem, which is not an issue that he's not already involved in with stuff like Neuralink and things of that nature, right? There's a great meme of the Bill Gates microchip versus the Elon microchip. Have you seen that one?
Oh, it's like
I think you shared
Bill
it
Gates
before.
bad. Bill Gates good, Elon bad, right?
No, the opposite. Whereas like, Bill Gates is trying to inject me with a microchip. And then, people on the other side of the meme are like, no. And then Elon's like, I'm going to inject you with a microchip. And they're like,
they're like, take my brain.
Where?
Yeah.
So it's interesting. Like it's a brand thing. It's a brand issue, right? And I think if one of my other favorite takes is Tim Urban. I think I sent that in the
I've actually got that up here. Do you want me to read it out real quick?
Bilal knows Tim Urban. He's interviewed him. So
he said to everyone who's suspicious of his motives or his competence, all I can offer is I've spent a lot of time talking to him, and I wholeheartedly believe his heart is in the right place in these endeavors. He has time and time again solved problems the world believed were unsolvable. He was quote tweeting another tweet. I can pull that up if necessary, but it's essentially in response to a lot of the criticism that he's been getting for this. I'm just pulling up the other tweet that he wrote. He said, I disagree with the why would Elon waste his time on Twitter take. Whether we like it or not, social media has a major effect on politics, on global events, on our minds. It's changing the way changing the world in ways that affect everything. I think it's a great thing for Elon to work on. So that was what he was initially talking about. I think that's an interesting, because what we talked about before, Brian Armstrong talking about free speech, which for some reason, free speech has become a very right-wing talking point. Like traditionally, free speech was also a very left-leaning talking point, right? Or something that people would fight for on the left, for sure. And there's just one last one I'll also read out, which is in reference to this right-leaning thing that people think this is somehow just like a massive win for the right wing. Elon Musk is not necessarily even right wing, right? Like he might be very pro free speech, which might put him on that side in some cases. But this person tweeted, Elon Musk is left-leaning, is a card-carrying member of the ACLU, and is one of its biggest donors, and is in charge of a company that has helped revolutionize clean energy, climate-friendly transportation. But some people despise him because he has a lot of money. Again, I don't know if that's true, but I think that it doesn't sound that crazy to me if that was the case. My only thing I wanted to add on this is yesterday when I was reading through a lot of this stuff, I was laughing at the memes and I was like cracking up a little bit, but it was honestly kind of making me a little bit sad because I could just clearly see people who I know who are fairly smart people just picking one side or the other.
Yeah.
And it was just like they were retweeting stuff where I'm like, it was just so obvious. Like they just read New York Times, or they read like one newspaper article, they read The Verge telling people how to deactivate their Twitter accounts, and they just picked a side. And that was just like, okay, this is the same thing happening again and again, right? Like no one's really trying to talk about it objectively, talk about the pros and cons. No one, like Trung said, we're obviously fans of what he's doing, but we're not saying he's perfect. He's done a lot of things that are a little dodgy. Like even in this Twitter example, he should have filed the papers way before, it sounds like. And we know he can like manipulate things with the way he like communicates on Twitter and stuff like that. So I'm not like defending everything he does, but objectively speaking, what he's doing is incredible, right? Like he's one dude and he's like, I'm going to make this happen.
Yeah.
So, And anything else? Yeah.
No, I think you gave a great example. I don't want to make a straight parallel, but it's like, how masks became politicized? It's like everything is like that, right? It's like everything is like, you have to be this or you have to be that. There's no conversation in the middle. And we talked about this before. But dude, I actually wanted to bring something up regarding, because I just looked at Tesla. It's actually down 12% today. It wiped out over 100 billion in market value. So it's down to 870. Anyways, we hit the 740 number. It's not too far from that now, right? I could put the financing in peril, but let's bring up Jeff Bezos. Yeah, I'm holding socks here, boys. Jeff Bezos had this tweet that went viral. You're talking about, Bilal, you asked about criticisms. What potential criticisms are there? So Twitter hasn't been in China for over a decade. I think since 2009, it's been banned. So many people are floating the idea that, okay, well, Tesla has 25% of their business come from China. And they also have a factory in Shanghai that produces cars. So now they're kind of in the Apple situation where before Elon had exposure to China. He's always had it, but now Twitter is kind of brought into the mix, right? So people are wondering, is this now a point of leverage for the Chinese government to be like, hey, Elon, like there's a lot of negative stuff going on Twitter about China. Why don't you, tweak the algo to do something about that, or we might just shut down your Tesla plant. That's kind of the strain of thought. Bezos said, interesting. Did the Chinese government just gain a bit of leverage over the town square? And then he follows up with, my own answer to this question is probably not. The more likely outcome is this complexity in China is for Tesla rather than censorship for Twitter. And then he did another backhanded compliment. Maybe he's Pineapple Bun from YouTube. He goes, Musk is extremely good at navigating this kind of complexity. Total backhanded compliment. But I think I'm not saying that there is credence to that. I'm also saying there's not credence to that. There's something there, right? I doubt that I'm going to go with Bezos is your follow-up to it. I don't think it's going to be a censorship issue for Twitter. I think it's just a Tesla specific issue. And the reason is if Elon is able to move forward with the opening of the algo, which, listen, that's going to be a heavy lift, right? But he does want to peel back the hood a bit. And what that does, though, is that gives him an avenue to say no to China. It's easy, right? Like, first of all, he's going to probably say no because he's Elon. He does have that kind of control, and he's the richest person in the world, or whatever people think. But the other part of it being, if you open source the algo. So again, this is under the premise that we're able to pull this off. That's a big part of it, because now you're like hands off, right? It's like, all right, I'm not going to do it because the whole world will see. So that's just the way it is, right? So we'll see. That's probably a point that has some merit to it versus the what is he doing with $43 billion point. But coming from Jeff Bezos is funny because Amazon basically gutted the American middle class by bringing over Chinese goods on the cheap. There's however you feel about that. I think 40% of Amazon's third-party marketplace is Chinese manufacturers or sellers. So, it's a teapot calling the kettle black in this case.
Jack, anything else you had thoughts on? Thanks for that summary, Trung.
I mean, I think we'll probably keep talking about this for a long time. I just one interesting thing I think is worth looking up for people is go and listen to Elon talk about money, like how he thinks about money. I think that's kind of a window into his motivations, maybe, and how he thinks about, obviously these endeavors that he's pursued over the last couple decades are what did he say? 90% failure rate, likely. Yeah. He assigned a ridiculous probability to it succeeding. And I think the idea of having the foresight to understand how important something like Twitter is and wanting to develop it with that foresight in mind, which I'm not saying the people that are running it right now don't have that vision. I'm not saying that at all. But I also think even Jack Dorsey, the endorsement from Jack Dorsey to me is a really compelling reason to support this idea, and almost reminds me of the, you remember the Dave Chappelle Trump intro speech? Do you remember that one on Saturday Night Live?
Oh yeah. When he did the day after the election, right? Yeah. It's
there's obviously some parallels there that are not accurate in this situation, but I don't know. I just think it is really easy to fall into an echo chamber and all the three of us are we think Elon's great because he's an entrepreneur and we we have a similar being even on this podcast right now is a signal of the things that we pay attention to and that we care about. And there's probably another podcast with 3 people right now saying the world's going to burn and everything's doomed because Elon's just bought Twitter. And I think one thing that we're not conscious of on either side of the argument is everybody is susceptible to absorbing the meme and having their own interpretation of it. And like, I don't think there's a way past that confirmation bias on the internet. And the weird thing is, like, being removed from physical interactions with people and just like forcing, like, echo chambers, I think, form in either scenario. It's just like kind of human nature. And then when you take the like physicality out of the situation, like, it makes it even easier and faster for those things to happen, because you're not like, you know, there's no physical consequence for you, like the Mike Tyson thing, right? Social media has made everyone so comfortable they say something without getting punched in the mouth. And that's like...
And someone found that out this week. Did you guys see that
right.
on the flight? The dude was pestering...
Some dude got raw on Mike Tyson for pestering him on a flight.
He got messed
Jack,
up.
I want to say, though, I do want to agree with Jack that I clearly have a blind spot. As I was explaining the China thing, I was like, listen to him, like, oh, you know, there's something there. And the other one that also is a bit of credence that we should probably peel back a little bit more, but let's not go too deep in, is like somebody tweeted, what if it was like the Koch brothers that was taking Twitter private, right? Totally fair. Like, they have this reputation. They're obviously not super active on Twitter.
It's like, well, everyone has a point of view, right? It's like you're extrapolating one person's point of view, and every business was built by one person initially, right? Or like a very small group of people. Like, you don't get together 5,000 people and build a business on day one. It just doesn't work that way. So it's like everything is made in the image or the like imagination of one person. Mark Zuckerberg controls Facebook, and obviously he gets a lot of heat for it.
That was funny. I saw a lot of people sharing that yesterday, saying if you really want to quit Twitter, you should go and go onto one of the other social networks run by other billionaires like Evan Spiegel or Snapchat, or you want to go to Facebook, Instagram with. And I completely agree. I mean, I think what Trung described earlier was a really good characterization of like splitting up that other side of the argument into just anti someone's rich, basically. Like, why does someone even have this money? Why should billionaires exist? That sort of, you know, umbrella. To like the maybe more reasonable thing of what's his motives? Like, how is this actually going to impact not just free speech, but hate speech? Is anything going to go, you know, anything could go now on Twitter? How are we going to protect people, make people feel safe and all that sort of stuff? Which again, there's a whole spectrum of ideas there, which some are reasonable and some are just also idiotic. So that's one part. And I think, Jack, the way you just summarized it there was really brilliantly done as well. Like, you're right. Like, we all do have that echo chamber, right? And we all have a point of view, and it's very difficult to get over that. The only thing I would say, which I'm not sure if I even completely disagree, but one thing I would say, it should be easier online to find those other points of view, but we don't, because the algorithm shows us stuff that's most relevant to us. So we become part of these groups, and then the algorithm takes us into this you know, spiral of the same views because we click and engage with it more.
Yeah.
Right. So like, if you could argue that in your current area, like physical location, people generally, they might not all think exactly like you in terms of, you know, things they're interested in and stuff, but a lot of the time they're in a similar socioeconomic class. You mostly, the politics are similar because in certain regions people are like left leaning or right leaning, etc. So I would say, if anything, the internet has the potential to show you those other points of view, but it's difficult because of the way the incentive design is such that you click on things that you are scared of or incited by. Exactly.
Well, so, Rick, actually, if anyone didn't listen to that episode, you should go back and listen to that.
He wants to turn up at someone's house.
Right. So Rick maybe got his wit. The only other thing is, like, you know, when you say you're going to open source an algorithm, it's like, again, that's like, oh, that sounds great. How many people of all the people that use Twitter are going to be able to understand the programmatic decisions that are being made to show them a piece of content? Like, that's a good these point. Things are like, they're like powerful in theory, and I don't want to discount anything in practice. It's just like, this is an incredibly hard problem that people have been working on for a long time, and nobody's been able to get even remotely close because, again, I think the business model is also a huge driving factor here, right? It's like, if you're optimizing for engagement, you're going to make it funnier, edgier, like more like
extreme,
just sharper, pokier, just like you want to elicit a reaction,
like Jack's thumbnails on YouTube.
Yeah. There you go. I mean, it's the the Bitcoin like
that face.
Yeah.
Wait,
is Bitcoin going to a million USD? Yeah, just like we're, I don't know, actually Nikita Beer, Nikita.
Yeah, Nikita. He had a social startup, TBH, acquired by Facebook. He added Elon. He's like, hired me, that. Twitter VP product.
I think I've actually liked a lot of his takes on it, which is like people don't really understand how complex this problem is from somebody who has built a business that obviously operated in that space and got acquired by a huge player in that world. It's like, this stuff is just like it's a manipulation of biology in such a weird way that like when you give people the ability to say shit anonymously, to have whatever picture they want, like to represent themselves, and there's no real world consequences for what you say, you're not actually like creating an environment for humans to have a dialogue, right? It's just like this abstraction, which is like has all these really horrendous incentives underneath it. Quite honestly, that just creates chaos. So we'll see what happens with it. But I don't think.
Former Reddit CEO Yishan Wang, that went super viral. You guys remember that thread?
Yeah, we talked about that friend.
Yeah, like we talked about it briefly, but he was like it is really hard to manage. He's like, at the end of the day, it's like people just want to argue, or like that's just where the default to in kind of these mediums, right? It's like it's just not that easy to allow free speech to bloom because of moderation problems. Facebook spends $4 billion a year moderating. YouTube and Google. Bilal had to sit in the bin for 30 hours a day looking at content when he joined 30 Google.
hours a day.
Yeah, so
wearing my suit.
Yeah, wearing your suit.
I think a good like mental model is like, if you imagine your like the coffee shop you go into or the bar that you drink in was anything like your Twitter feed, you wouldn't want to be in there. This is the worst fucking place on the face of the earth. But it's entertaining when you can watch it through a
Thread boys having
glass.
a pint.
Yeah.
Right.
What did Thread boys drink?
I wonder. Yeah. Imagine that. Sit down and shut up. Let me tell you 50 reasons why I'm drinking this beer. Yeah.
Well, there are a couple of things I think Jackie brought up great points. The open algo is just not that simple, right? So me like hand waving, being like, well, Elon can just say to China, hey, listen, it's out of my hands now. The algo is open. We've exposed it. It's just not that easy. The other one that he wants to do that, again, there hasn't been a lot of information on what that means, is like, I'm going to authenticate all humans. I actually spoke to our previous guest, Board Elon, the pseudonymous Twitter account. Great guest, by the way, amazing episode. But I asked him if he was worried that meant that he would get doxxed. His opinion, and I agree with it, is when Elon said that the humanist angle, he just meant he's trying to get rid of bots by having way better like CAPTCHA verifications, right? Like, those CAPTCHAs that you have to do to verify you're a human. But that's not an easy problem either, right? Because it's a full-on arms race. People and these bot armies, they're trying to find every edge, and every major platform from Google to YouTube to Facebook to Snap, they're dealing with this stuff, right? And to say that, we're just going to make it and it'll happen overnight, it's just not going to. Such a naughty problem, like KNOOTTY, not naughty.
Both. I was about to say that was a new one.
Yeah, it's both problems. And the other thing that they said they're going to do was, get rid of bots. That's the other part of it, right? Get rid of bots in open source. These are not easy problems as well. I'll say he could be in for a world of hurt. I think that's what Yishan Wang basically laid on his thread. He's like, this is not easy. And the point he made in that thread, the former Reddit CEO, was like, Elon is so important for like these real world problems he's tackling, like going to space, clean energy. Although you can make an argument, which is what Elon's trying to do, is like free speech may be just as important as this stuff. If you care first principle or more.
What's the point of going to Mars if everybody's like, fucking going to kill each other on the ship, right?
So like, fair enough, right? It's
true.
I guess in the contra to Yishan's thread is like, well, actually, this might be more important. So there's all those pieces going on. And so this will be released on Wednesday, April 27th. Man, this Tesla price move is actually a little bit concerning to me because it's already gone down 12%. It could affect the financing. The one thing somebody wrote here is I lost it, but he basically said Elon can stop the yo-yoing of Tesla stock if he just says, I'm not going to sell Tesla to do this deal. Fair enough. But we don't know if that's the intention.
I think that's what it is. Maybe it's Ken Griffin pulling some strings.
Yeah, because now, I mean...
It's Bill Gates shorting Tesla stock, man. We saw that text exchange with Elon Musk. Did you guys see that? I assume for people who didn't see it, there was a text exchange between Elon and Bill Gates, and Elon was
my God,
being asked to help on the philanthropy side, and he was like, first of all, have you got a $500 million short on Tesla? And he's like, unfortunately, yes. And then we didn't actually get to talk about that. That was in between episodes. Yeah.
Well, that will get us canceled if we put up the photo that Elon did. Elon compared Bill Gates, for the people who don't know, to the pregnant male emoji figure. And then obviously the mainstream, the haters are just like, this is the guy that's going to own Twitter. Fair enough. Again, I get it. All right. But yeah, I think there are, let me just throw one last thing here. I'm going to go super quick on this. But so Ben Thompson, tech writer we often refer to, I didn't get a chance to talk about last week, but his proposal of what Elon could do goes back to the history of how Twitter started, right? Twitter really did start like a protocol. Like there are all these Twitter clients before. You guys remember all the Twitter clients? TweetDeck, Tweety, all these things where they plugged into the Twitter notification messaging protocol and had their own UX interfaces. But then Twitter realized, wait a second, we're just going to monetize all that. They shut off everybody, right? Basically cap them at what these clients could do. But Ben Thompson's argument is that Elon should separate, and this can only happen as a private company. There's no chance this is happening if Twitter's public because of how the volatility and how big of a change this is. You separate two companies. You separate Twitter app, which is what we use every day, the Bluebird app, and what we know and culturally what everybody knows is 200 million plus users. And then you separate Twitter, the protocol. You allow people to pay to use the protocol. So, for example, Donald Trump's social network, Truth Social, could just plug into the Twitter protocol. How does Twitter make money? Well, the Twitter protocol, you have to pay them to use the network and all the functionality of that protocol, right? The messaging, the notification. And you can do other ways to monetize if you wanted to. But the point being, it gets rid of all these monetization, these moderation questions, because now Truth Social or social network ABC, they can deal with their own moderation issues, right? But they're just paying Twitter for the right to use a protocol, just the same way that people use email protocol. Granted, you're not paying the email provider, but this is a privatized protocol. But 3 points.
Can I just ask, Trung, on that one point specifically? I don't know the details of this, but I'm pretty sure they have something like this where obviously it's not separated, but they have these big data deals. Like I know with Google, for example.
Oh yeah, they have big data deals, but it's a fraction of their to your point, revenue. They already have it, right?
They have something like that. And I guess the question is, the open question is it just that size because they're not that focused on it and separate it out and, gone gung-ho? Or is it that size because that's volume, that's the market. Exactly. Yeah. And in my opinion, like their biggest, I just remember like Google would pay a pretty decent amount of money to get, tweets into Google search. Do you remember they brought the real-time search into it and stuff like that?
Yeah.
And I'm pretty sure they still have a deal right now. Like I know that it was being negotiated recently. So
Ben Thompson says, he actually answers your question directly. It's a great question. He says, actually, what Twitter, if you were to split Twitter between Bluebird app and the protocol, what it actually does is, why is it hard to spin up a social network? Look at Truth Social. What's so hard about it? Having the network, right? Having the tens of hundreds of millions of users. But basically what Ben Thompson is proposing is like, oh no, you get access to this Twitter user base, and the people that want to go to your network can choose to do so. That's not a guarantee it'll happen, but he's suggesting it helps solve the cold start problem. It's like I can port over and be like, hey guys, go in here. Again, that's not going to guarantee you can port over everything. Trump hasn't been able to do it, so it's not that simple, but maybe you have a tooling that makes it easier. But now you have a free market of social networks, and you find out actually, let's find out how much moderation people actually want, right? Do we actually just default into where we are now? Or is there like an optimal amount of moderation? And all these different business models could find out. And Twitter, the Blue app, the one that we use every day, is no longer responsible for these moderation decisions. So who knows if it's going to happen? On the Trump part, the last thing I'll leave is this. DWAC, his SPAC, is trading down about 15 to 20%. So people think that he might go back to Twitter. So there's that. But a lot of things are going on, man. This is not a done deal yet. It's done in agreement, a lot of moving parts still. So I suspect we might have to chat again in the future, but I got nothing more to say on that. No, thank you, guys.
That was great. Thanks for the comprehensive summary there, Trung. The only question I had, and I know we've gone for a while on this, but just because we're talking about it, this is a deep dive, is the kind of question I have is there a better monetization model? I know we all hate ads. Look, like I've worked with ads for a long time and I even hate them, right? But I understand the flip side is they subsidize a free internet. Yeah. And the ads online are generally way better than offline, and there's lots of benefits to that. But we know that was just a way for people to get free stuff that previously we paid for. Like we previously paid $30 to $50 a month for TV and watched 7 minutes of ads in 30 minutes. And now we complain about pressing a skip button on YouTube for watching something for free after 5 seconds. So that, to me, is also the expectations of customers and users has changed so dramatically because we've been subsidized for 20 years in consumer internet anyway, or plus by this point. And so that's one part. And you know, like the question is like, he's probably pretty anti-ads, I'm assuming. And I just think Twitter has just had terrible ads. Like they've never done a good job, not necessarily from like the creative standpoint, but just the back end, the way the data works and the way that they actually do all that stuff that Facebook and Google do so much better. So maybe I don't think he's going to be focused on that if he takes over, because I think he wants to find other ways to monetize. But the question is like, if there was a better way, maybe there would be something better, and maybe or it just hasn't been created yet. And we've talked about Web3 social networks and like BitClout and those sorts of things where there's a different model for users owning a part of it and creating new incentives that aren't click based, right? I think actually a subscription model for content is closer to that already, where people are incentivized as a creator.
Yeah, and they have the tools. They're bringing them out.
They're bringing the tool, exactly. And people are incentivized to keep you paying. Ben Thompson, you just mentioned, I keep paying for his stuff every month not because of the clickbaity title, because I know he knows what he's talking about and I want the best content. So I think already there are people doing stuff moving in that direction. And the bigger question is, what's that right balance? The same way we talked about Netflix. We all pay for Netflix, but if there's a free version that's half the price or free, monetized by ads, maybe the market will decide. That's kind of how I think about it. And so far, the market has decided they want free YouTube and they want free social networks. And until someone creates something better, then
I pay for YouTube Premium, buddy. Me
too. That's true. But anyway, so that was the only kind of open question I had. But anything else, Jack, from you before we move on to our last section, Edge of the Internet?
I wonder. I'm sure this information is available. It's just Twitter seems like such a simple company versus some of these other like huge internet behemoths, right? Like a YouTube or Facebook.
Definitely.
And I don't know how many. Do you know how many people work at Twitter? Any ideas?
I think it's 7. I heard today 7,500.
Yeah, 7,500. So
that seems insane. Does that not seem insane to you? How many people work there?
But then Facebook is 35,000. I think I heard today as well.
No, but I'm so glad you brought that up, Jack, because the average revenue per employee at Facebook, even though they have tens of thousands of employees, is 3 million per employee. The average revenue at Twitter is 600,000. So they're monetizing. If you want to go apples to apples, which is not fair, obviously, but they're monetizing at 20% of what Facebook is, right? So actually, one of the things that I think the lender looked at the Twitter situation, they're like, they're probably have to fire realistically a third of this workforce. Not saying whether or not you should, but just based on the revenue per user number there's a huge disconnect, right? Like the value creation on that end is just not happening. And I think there has been some allusion to the fact that they're going to have to fire like hundreds, if not 1,000 plus employees, which will shave enough off the expenses to basically get Elon's interest payment in line. But yeah.
And that's normally what happens in a scenario like this, right?
Exactly.
Like
any classic leverage buyout, you're going to come in and fire individuals. Listen, not supporting any, but I can fire 12 floors of people.
Yeah,
interesting. There was a funny tweet. Was it Hunter Walk? Is that
the VC?
They said they locked down the codes. No one could make changes after the deal was announced. I think he said Twitter went through a similar phase of locking down the source code from 2013 to 2019. Because they haven't done it. Haven't done a great deal, right? In that amount of time. Man, I think it's an incredible product. It's definitely changed my life. It's a fascinating. By $44 billion, I would definitely go in for it.
Yeah, we'll be paying a lot of subscription service. But last thing I'll add is this. Yeah, they cannot do the updates anymore. That's just pretty standard M&A stuff. Is before the deal closes, which presumably will take about 6 months. You can't be shipping all this new stuff, but to your point, maybe they're shipping up some stuff that they're picking up some real landmines in there.
Another maybe we save this for another episode. I'll just open up for the percolation to begin. But all the pricing strategy with Tesla, the self-drive, essentially zero margin. This is it's a software business, and you could argue that a good portion of Tesla's margin comes from operating as a software business, right? You buy the self-driving component of the Tesla, they ship 2 lines of code to your car. It doesn't change the amount of money they spent developing the car, but it gives you access to the software. So I think from that perspective, there's probably I can't imagine this is a situation where he's going to figure it out down the road. There's probably some ideas already cooked up on that front.
Yeah. All right, boys. I think we can. No, that's a great point, Jack. I think for the sake of time, we can wrap it up. But overall, I know we've covered this a few times, but this has been obviously the biggest story going. And really, this one, I was really looking forward to just digging in deep the way we did today, because I think it's finally actually, it's not closed, but it's been agreed.
We did hit it to this level. This was what we needed.
Yeah, no, This was really me. I loved it. So just to wrap us up for the Edge of the Internet segment of the show, we've got SBF, Sam Bankman-Fried was on a podcast with Matt Levine. Is that right?
On Lod's podcast. It's hosted by Joe Weisenthal and Tracy Alloway, my ostensible colleagues at Bluebird Opinion.
Ostensible, exactly. So, but what, Matt Levine was on it too? Or I didn't hear it yet.
They brought Matt Levine on. Yeah, so this is the second time. So Matt Levine, as we've discussed many times on the show, he is the LeBron James of finance writers. They brought him on with Sam Bankman-Fried, SBF.
I don't think anyone's ever said that sentence before, by the way. The LeBron James.
This is the second time. You know what? I'll tee it up, Bilal, since I listened to it, but I'm going to ask. So as our listeners know, Bilal Zaidi is our resident Google expert and DeFi expert. So the premise of this episode and why it's causing quite a bit of buzz, I'm sure a lot of our listeners actually heard about it, was SBF was basically asked by Matt Levine, the finance guru, please explain to me, like a 5-year-old essentially, what is yield farming? What is going on? And the way SBF kind of explained it, and Bilal, you correct me if I'm wrong here. If I'm paraphrasing SBF, so I might be getting it wrong. Bilal probably might have better understanding. But he's basically saying listen, there's a box, okay? So these yield farming protocols, there's a box. You're saying the box is worth X, and you are getting people to put money in said box. And as more people put money in said box, the value of that box increases, right? So it has this dynamic of essentially a Ponzi scheme and the memification of assets. The money's going in the box. everybody kind of agrees that one day the box is worth 20 million. And the next day they agree, you know what, it's worth 200 million. And we'll start paying you box tokens based on these new valuations, right? So Matt Levine says, this is his reply. He goes, well, the way you describe it, the box should be worth 0. It kind of just sounds like it's a box, but please continue. And SBF is like, fair enough. He walks through how like values in these kind of assets can be created. But still a lot of it just sounds like it's a box that people agree is worth something. And then Matt Levine follows up again with, listen, I'm a fairly cynical person. And that is so much more cynical than how I would have described yield farming. He goes, you're just like, well, in the Ponzi business, and it's pretty good. So
wait, he said, I'm in the Ponzi business, no?
Yeah, he's like,
you're just like, I'm in the Ponzi business.
No, like Matt Levine's like talking, he's not pretending to be SBF, but he's like, if I was explaining he's like basically saying, he's like, oh, hey guys, this is what yield farming is. Like, I'm in the Ponzi business. It's kind of,
got it. Yeah.
And SBF said, this is crazy. SBF goes, I think that's a pretty reasonable response. But then let me play around with the idea a bit, because that's one framing. And he goes, this is a great line from SBF. I think there's a sort of depressing amount of validity to that framing. So SBF is like, fair enough, right? So Bilal, let me throw it to you. This idea of like, again, I'm butchering SBF's framing of it, but it's like, just this understanding there's a box, it's a protocol, and you kind of all just agree that there's value in it. Like your time in DeFi and you're looking at APYs, how much of that resonates with you?
No, well, the first thing that I thought of when you were describing it was something that everyone agrees has certain value and it's based on other people coming into it. Yeah, that's a Ponzi by definition, I guess, right? Though, again, the philosophical question we've asked many times on the show is like, how much are other things that we use day to day based on similar principles? Like, that's a slight stretch, but like if you just say any currency, right? Currency doesn't have intrinsic value anymore. It used to with, being gold backed or silver backed or whatever. Now it is backed by a government and which is obviously way more than a magic box.
We have a collective belief.
Exactly. So it's still based on a belief that a government backs this, the economy backs this, all the assets obviously in a country. That's why the US dollar has been dominant currency for many years. So I'm not saying that's the same as a magic box where someone wrote 3 lines of code and is now selling dog coin, right? But at the same time, I think if you strip it down to just underlying idea, the idea is if we all believe something to be true,
right,
and enough people believe that, there's a chance that can be something that becomes true. I'd say the same for gold to a certain extent, right? There's a tiny percentage of actual intrinsic value in terms of like being used for machinery, factory stuff and jewelry, but a lot of that, from what I've understood, is really based on the belief, the idea that this is a store of value, there's a percentage growth each year, etc. So I'm just separating that first of all. I think we can say that about many things. As it specifically is around the yield farming idea, and for people who don't really know, again, I don't know if this is a real definition, but I think of yield farming as basically strategies and ways you can go and use a lot of these DeFi platforms or sites and basically compound your yield. You'll get like one magic money, internet money APY here, and you'll use that to borrow against and then go again and again and again, which if anyone who's worked in finance knows happens all the time in the finance world. Is what caused potentially the 2008 crash. We were taking these terrible assets, which were mortgage-backed, those terrible mortgages, and repackaging 100 times. And then we've all seen The Big Short, where the stripper is like, I've got 10 houses, right? So again, I'm not saying they're exactly the same thing, but of course it's a similar concept. So I think like the 2 questions I always ask, like I said in the last episode, are where's this money coming from? Right? Like, is it just them printing money essentially and printing a random doggy coin? And wait, what was the second one? I can't remember now.
Probably a roadmap, right? Like we talked about it. Is like, does this? Well, okay. So sometimes you can bootstrap a business, right? We've talked about this. Sometimes you can it looks like a Ponzi at first. We talk about with Axie Infinity, right? Like this game where like the dynamics are all Ponzi, but it's like, okay, now you have this war chest of money. Let's forget about the fact that he got hacked, lost 600 million, but like, can you turn that war chest and use those funds to build tooling and a game and mechanics and community that can actually create this stuff, right? I think SBF points that out. He's like, look at Uniswap or look at what is it, AAXE, was it Aave, and he's like, in a way they do have this magic box element, but there does seem to be a roadmap where they have a lot of functionality for society potentially, right, in a crypto world. And the other thing I wanted to add, Bilal, was he hit on exactly your logic. He's like, he talked out through the line. He's like, well, you could value something like Warren Buffett did with cash flow, right? Or look at the last 18 months of the financial markets. You have AMC, you have Hertz, you have GameStop. A lot of the value in these assets is just pure belief, the stuff you talked about. Yeah. And I don't think he was justifying any of that. It's like, makes it okay. He's like, it's just like
he's trying to describe though what's happening, right?
And he's like, it is a valid way to value. Clearly, the meme of something as Jack. Let's throw it to Jack. Jack, you are the master of saying the meme of something clearly has value. We just haven't discounted cash flow modeled it yet, right? Oh, yeah.
Sorry, I was on mute. I think it's just it's basically like you're bypassing some of the other steps in the process. Like let's say GameStop, the value is created by people buying games, right? But we just made the game trading the GameStop stock, right? That the stock is now the product instead of the games.
That's a good way to put it. Yeah.
And then the narrative or the team and that's the way in which you bootstrap liquidity is like, and I think the NFT market functions a very similar way, right? It's like, even the notion of a roadmap or utility or this, every stock trades on that narrative, right? Future earnings, like multiples of earnings, but we ascribe a higher value, and rightly so in a lot of cases, to like a physical thing, right? I'm going to bet on Coca-Cola because I know 1 billion people are going to go out and buy a bottle of Coke tomorrow. I'm going to bet on Aave token because I think 1 billion people want to get 6% on their, on their deposits tomorrow. Because I think this website is positioned the best, and I think the narrative is the best, and I think they have explained, their ability to cut out the middlemen in the financial transaction the best. So I think it's like it's almost competing narratives. And to Matt Levine's point, it's like that sounds like a Ponzi. It's like in a lot of ways, they're like some of those things go on to find like product market fit in some way, and others don't. And like maybe some at the beginning, I think the ones that begin, I don't know. I think it always also depends on like what the vector is for adoption. Like if it's just like a joke, that's the reason this thing is like accelerating. Look at a Dogecoin or something like that. It's like, there's probably a runway on that, right? There becomes a point in time where culturally something is not funny anymore, or like that picture of that monkey is not cool anymore. But like, hey, people are addicted to Coca-Cola, and that's like, you've got a pretty good moat there, right? That's going to last for a long time. I think people are just starting to now play around with like meta products. Like this shit doesn't exist physically, but it's still a product, right? Like you're going to go and consume content about it every day, or like interact with the community.
We got a guest. We got a special guest.
Yeah, for listeners, Jack's dog just jumped in here. All right, so let me do this, guys, because I do have to boogie, but let me wrap a bow on this conversation, because SBF actually had another podcast conversation with Tyler Cowen, the economist from George Mason, and you guys will love this. He says, what is Elon Musk's greatest product ever? Or what's his most successful product? I don't think it's an electric car. I don't think it's a rocket ship. I think the one product he's created that's outperformed all other products in demand is Tesla, the ticker, right? The ticker of perfect. Tesla, right? That is his masterpiece. How is Tesla priced? I don't know. It's worth Tesla. It's what people want, Tesla stock. That's brilliant, right? He understands this. I mean, he teases out the meme portion of evaluation more with Tyler Cowen, but it's just funny when he's talking to Matt Levine because Matt Levine's just so blunt, right? He's like, sounds like a Ponzi scheme. And, but SBF had Bilal's kind of answers like, you know what? I love how Bilal just took it back. He's like, guys, everything at the end of the day is a belief.
No, well, not everything, but Trung, I know you got to go in a second. I did remember the thing that I thought about before. Basically, the kind of framework I have when I think about any project is, does it need to be crypto?
Yeah.
Like, that's the first question, which we've talked about before. Where does the money come from? Is it just, based on printing an imaginary magic internet money? Or is it incentive based? Is it taking out a player like we've discussed in real DeFi, like the solid blue chip projects? That's what you're taking out the middleman. You're going direct. There's value creation there that is spread between more people. And then the last point is about valuation over time. Is it only going to grow because of the greater fool theory, right? And again, I'm not even saying that alone is terrible, right? Like, as long as you know that's the game you're playing. If you're buying NFTs and they are $100 today, and you think it's going to be 2,000 in a few weeks because someone else is going to come in later. As long as everyone's doing something legal and everyone knows the game they're playing, I'm not against that. But there isn't necessary intrinsic value there, the same way Buffett would value based on cash flow and all that sort of stuff. The question is, over time, are we going to move to a place where the market is only moved by the meme or, the story, the Tesla example you gave there, or the GameStop example Jack mentioned? Because I would argue, in a global pandemic, when we've got all-time highs for a stock market, that already we've way beyond things making sense. So it wasn't just these meme stocks, right? The whole of the S&P 500 was at all-time highs, right? So that was because the story was in greater society, the people who actually make decisions, people that are putting trillions of dollars in stuff, they were the ones saying, oh, well, where else are we going to put our money? Money is free. It's 0% interest rates. We're going to put it in real estate. We're going to put it in stocks. And as soon as the real life conditions changed and enough people believe something else, interest rates go up, growth stocks get hit. That is just how things shift. So I'm not saying it's exactly the same as fundamentals of buying Coca-Cola stock. Of course not. But ultimately, it comes down to humans making decisions based on the story they believe.
And I was just going to say one fundamental difference is like the incubation period of the thing. Like, crypto and tokens are a very different vehicle than stocks. So in the case of a GME, it's like we've repurposed this into a meme, but it had to go through so many tests to get like listed on the New York Stock Exchange in the first place, right? It's a very different thing. And now this is like the token is the product, and it doesn't have to go through all of those hoops and loops, which means like you get exposure to it from day zero, which either means, you're going to go broke really fast, or you're going to get exposed to a lot more upside because you're not on day of IPO, you're on day of like, we're in the garage and we're coming up with this idea. But the problem is it buggers up all the incentives, which I think maybe we're planning to talk about that today, the serial thing. We need to come back and do that.
Yeah, we'll come in. Let's say, that's a great one. Okay, we're not going to ruin it, but people, big things coming.
Wait. Just, that was the serial, the Obama thing, right?
Yeah.
So just
we'll talk about
it next
time,
week.
Yeah.
But it's a great thought experiment in incentives in this like tokenized environment.
Yeah, completely. All right, I know Trung's got a boogie in a second, but I think that was really nice discussion on that. The last thing I was going to say, the 30-second summary for me is, like all these things we've talked about throughout the show, there's a spectrum of good stuff and bad stuff. There's people that are doing crazy stuff, and there's people that are legitimately trying to take out the middleman with code and with 100 times less people having to work in the chase across the street from me, right? So, and I think those people are building something legitimate, and the whole point of this podcast is for us to be able to talk about them openly and say, these are the things we think are cool and have potential. Here's a bunch of bullshit, but we're happy to play in the bullshit if we are all adults and know what we're doing. So that is kind of how I think about it. But like we said earlier, if you come into this conversation listening to that interview thinking DeFi and crypto is stupid and bullshit and a Ponzi, you're gonna leave with that. You can easily find the anecdotes that support your argument and vice versa. So I think I need to listen to that anyway. It sounded like a good chat. A few people sent it to me.
Well, here's the takeaway. Not investment advice. Final takeaway, guys.
There we go. We go. Bring it back. All right, boys. I think that was a really meaty one. I really enjoyed that. Any parting thoughts before we say bye?
No, thank you, listeners, for the year. Honestly, man, it was amazing. It was a great year, guys. More to come. Big things.
It's been an amazing ride, and we appreciate all the love and support. And like Trung said, we've got big things coming as always, but also go into the Telegram. And if you haven't shared yet, just know we are reading every single one of those. I've literally got a spreadsheet with a word cloud going on the side to figure out like what
DYOR,
we should
number one.
do your research. But no, it's really helpful, and it's helpful for us to make the show better and to make sure we're giving you guys what you want. Because everyone has a different opinion what they like, and so we'll try our best to take that feedback. All right, Jack, anything else before we wrap up, mate?
No, that was great. Thank you, gents.
That was fun. Likewise.
Thank you,
all right, we'll see you next week. Thanks again, and have a good week. Speak next week. Bye.